From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 20, 2016. Today we're going to be taking a look at the USDCHF, the US dollar versus the Swiss franc, for today's analysis and the trade that I'm watching this first part of the morning. I want to start all the way out here on the weekly time frame because I think it's important for us to realize the levels that we're reaching right now into the 1.0300s are some levels that we haven't seen in quite a long time. We have to go back to the left-hand side of the chart, and the last time we were into these 0300 levels was all the way back here in 2010. All the way back over here. So 2010 was the last time we were into these same levels that the current market is at. I did one thing with Fibonacci. I took it from this high right here down to the lowest low that you see here on chart. So high down to low. And I think that's going to be interesting for us as we get down to our current market because the 618 Fibonacci retracement level of that range, that high to that low, sits right at our current market price as well. So interesting there. I took it from here, no Fibonacci from this high down to the low, matching up with current market price, but this one does. So I think that's interesting. Let's go ahead and take it down to the daily, begin to zoom it in on our current market. Now we can see, as I scroll back just a little bit, there's our last high. We touched this same level back in November, late November, and here we are again. But prior to that, like we just looked at, 2010. By the way, that dashed blue line inside the blue shaded area, again, is that 618 fib that I just showed you from the weekly time frame. 1.0305 is that Fibonacci level. So you can see the resistance over here on the left back in November and current resistance. So that should give us a wider angle perspective of what's been happening for this currency pair over the past several years and, of course, a couple of months going back to November. Now, we're challenging that again today. The real question is, should we buy this? We're at the very highest peak high. We're into a multi-year high. We're at the high of the most recent uptrend that we've seen along the blue trend line. So should we buy this? Well, I often say in the live trade room, there's only really two reasons to buy anything. You buy it on a dip into support or a breakout above resistance. So we need to shatter this price ceiling, this glass ceiling that the market is trying to break through right now. We need to shatter through it before we can have confidence that it's going to continue higher, because obviously the last two times, like I pointed out, that we've been here back in November and currently, it tried to break through 0300 but was unable to sustain that breakout. So we want to be confident in that breakout. So we either buy on dips to support or breakouts above resistance. Zoom it in one time here on the daily. Actually, let's zoom it in twice. And we can see over the past 3 days, we did get that dip down to support into the 0255.50 level. Fell down 1-2 times. And now today, the low of today's candle happens to sit right around the 102.59 level. So it came back down there pretty close, but not all the way to the purple zone. And now we're challenging the high. So obviously, we're not buying into support today. Buying into support, too far away. So the next thing we're looking for is the buy on a breakout of the resistance. 1.0310 is where I have the top of the line. You might even look at it 0300 or even 035. 305 where that Fibonacci level is, but either way you look at it, right around the 300 to 310 level, we need that breakout before we can have confidence that it's going to continue to pressure higher. Let's go ahead and take it on down to the 4-hour time frame. So here we are again, same area. We attempted here again, interesting enough, that 618 fib from that long-term weekly range that we looked back several years ago. Tapping there as resistance, bouncing back down to the purple zone. Now we're challenging again. So here's what I'm looking for. To confirm the breakout, I will always and often look for an open and close, a singular candle body that opens and closes above a resistance to increase my confidence that this is a real breakout rather than a false breakout. We don't want to assume, when this was a big blue candle right here, we could have assumed that that was the breakout. Then we would have been highly disappointed as it turned back around towards the purple zone. So don't assume on any push through like what we saw right here, but what we want to see to confirm the breakout is a singular candle body that opens and closes above the 0310 level today for the next opportunity to go long on the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.